Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing exactly a quite strong level of previous monthly resistance from which this move to the downside was created, which the market has now broken to the upside and is currently retesting as support. And already the market has started rejecting this level to the upside exactly as we wanted to see. We can also notice that from a pattern standpoint, as we have an impulse and correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.32 and 50% retracements lining up exactly with this previous resistance turn support, creating confluence of support at this area that we could in fact expect this market to test and then to reject to the upside. So here on the monthly, everything looks quite bullish and we could expect more potential bullish continuation. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, it is important to keep in mind that all this area is very strong structure for this market. From here, all these previous rejections to the downside were created. After that, the market broke above that zone. This previous resistance was turned support here and again here. And at the moment, the market is testing this area and currently rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation and for the market to continue higher, breaking above the previous high that the market is currently testing exactly at this area. So from a level of resistance like the one that we have here, we could expect a bit of weakness for the market to kind of react to that weekly resistance zone, so to provide a minor correction and then to continue higher. Now, the minor correction could be seen on lower time frames. In fact, if we go down on the daily time frame, things start getting quite clear. Now, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move to the upside. And in fact, that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect this move lower. Then from here, I made another breakdown explaining all the reasons for which we could expect this impulse. And again, after the impulse, I explained all the reasons for which from here we could expect first this correction and then the continuation higher, which again is exactly what the market is currently giving us. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, from a daily perspective, what we can notice is that now that the market has created this new move to the upside, we have new structure. In fact, this zone here is now previous daily resistance from which this move to the downside was created, which is now turned support here because we had the break above the level. Now, as we had the break, what we could expect at this point is a retest of this previous resistance turn support, and then inside of here to see more institutional longing, since this area is a confluence of support, and institutional longing usually happens inside of confluence of support areas. Now, why do I say that this is a confluence of support zone? Because we have this previous structure resistance turn support, and if we take our Fibonacci from the low to the high of this impulse leg, we can see how we also have the 0.32 and 50% retracements currently lining up exactly inside of this area, and that is what creates a confluence of support zone. So if the market will go and retrace to that zone, we could expect a potential move higher, breaking above the weekly resistance that we have identified at the beginning of the video. Now, if we go and see what we have when it comes to the commitment of traders, so that's COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the JPY, we can see how with the last reports, net positions on the JPY have been decreasing quite a bit. We went from minus 20k down to minus 79k net positions, almost minus 80k net positions. That is 4 times lower than what we had here. This indicates that institutions are moving to the bearish side of the JPY. This means that they're moving to the bullish side of USDJPY. So essentially, it's quite a long time that they have been longing USDJPY. And if we move back to the monthly time frame, we can see that that is exactly what price action was already suggesting, as the price has been moving aggressively to the upside, fueled by this institutional longing of USDJPY. This means that if the market here will actually correct to this confluence of support area, there is definitely the possibility to see institutional longing inside of this area, further increasing the probabilities of a potential move higher. So if we will have the break on the retest of this previous resistance turn support, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, what you can see is that at the moment, there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.